Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about option flow, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's Skool Community. Enjoy guys.
I have a general question. I've been just going through materials and stuff. I'm seeing a little bit of stuff about option flow analysis, and I'm just wondering a little bit more about that.
You have a more specific question?
I was going through some of the materials, and one of the PDFs was talking about volume profile, which we talk about, I think, on a daily basis. And then the second part of it was option flow analysis, and I just feel like we don't really talk about it.
Well, it was more volume flow than option flow analysis, but the volume flow is pretty important, seeing the rate at which orders are coming in and out of the market. But we're not really dealing with volume flow as much as we are just where liquidity is and where it isn't. So you can think of volume flow accelerating as we approach the edges of market structures. So as we approach the edge of a market structure and then pass through it, there's obviously going to be a change in the flow of volume from higher liquidity to lower liquidity.
Okay.
Right? We can get into volume flow in that analysis, but it's really not appropriate for us to talk about it from a strategic point of view. It's just a recognition of what is actually happening.
Got it. Yeah, and you've said a couple of things to people in the Discord at various points, I think, over the last couple of weeks, whatever. You're like, don't overthink it.
Yeah, exactly. It doesn't help. The problem can be relatively simplified based on our exposure to what the market is providing us. The level of volatility is going to tell you the rate of decay. And if the rate of decay is delayed, then that's a favorable environment for us. That means that volatility is high and we want to expand our exposure because that means there's more opportunity to make profit and lower gamma risk or lower sensitivity to price. What that really means is all we really care about is volatility high or is it low? If it's high, we expand. If it's low, we contract. So you can break it down to that kind of level. The next level is looking at opportunity for getting in or getting out. And that really comes down to market structure. When there's resistance to market going up based on the market structure, then that's an opportunity to get into a trade below the market. If it's coming the other way and if it's a move up, we're looking for pullbacks and finding support at a market structure. And when it hits that, we find support, that's an opportunity to put a trade above the market. And then it's the opposite when we're already in a trade. We're looking for support or resistance to help bolster our fold decisions when we're in the trade.
Thank you.
Does that make sense to you?
Yes, it does.
It's a lot to digest at first, but over time you start getting it. It's not really that difficult. I try to put all the structural analysis and stuff into real terms. It is really like a topographical map, hills and valleys, or hills and plains. The plains have less resistance, the hills have more resistance. And the hills are where we want to hang out. The valleys are like Death Valley, or if you've ever been out into the desert, before you enter the desert, you're going through the mountains and the hills and stuff, and it's nice and lush and green and cooler. You get out into the desert and you're going slow because it's more things to do, more places to see, plus the road is nice and windy. You get out into the desert and all of a sudden it turns into this hot plain. And if your destination is to an oasis or the other side of the desert, you want to make sure that you can zip through there and you have plenty of gas and water on you just in case. And you want to get through there. That's exactly what volume nodes and the lack of volume nodes are like. They're like mountains and desert. And that's how the price behaves too. It finds value in the mountains, it finds little value in the desert, and it wants to get across it very quickly.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.